Hello learners, welcome in today's discussion. Today we are going to do a continuation of the last discussion on accounting equation. We had done accounting equation, we had introduced accounting equation, and we were able to discuss on assets, liabilities. We were supposed now to discuss on capital, or another name we can refer to is equity. Good. So for those who are new to the channel, welcome. Feel free to come in the inbox. If you have something, drop in the inbox or comment section so that I can identify the problem you have and come and attend to you or make you to join the classes I have. Or if you are committed, you can find me in the YouTube by the name Mr. M.Patrick, and we are going to learn together. As I mentioned earlier that we are here to simplify mathematics and accounting. Anything to do with the calculation. If you are doing any course that involves calculation and you need my attention, don't fail to reach out to me. Come in my inbox, drop the right there. Anything you have in regards to consultation, I'll be ready to assist you through the discussions, and we can also find a way out how we can now do the discussion and make you to understand. Good. Because I tend to understand that if I help you to succeed, we all succeed, and if we all succeed, the community succeed, and if the community succeed, I tend to believe the country will succeed. Good. So that is my slogan as I continue helping the learners, as continue helping those involving in businesses, and even those needs more encouragement. We are together. This is the best place to be. Good. Now, accounting equation. Accounting equation, actually we defined it last time and we said this is just a simple report. It is involving a simple report, or we can also call it a statement of financial position. Statement of financial position. It is also referred to statement of financial position, or in simple words, you can refer to it a balance sheet, where it's going to give us the total assets. You're going to get the total assets of the business or the firm or the organization, or the total liabilities of that business owes maybe the outside party, also the capital. And we were able to define, to look deeply into assets. We said assets, these are just resources controlled by the organization or the business for the purpose to help it to generate income, or to generate income flow to the business. Income flow to the business. So, and we say the assets are categorized into two. We have fixed assets or long-term fixed assets, or you can call them non-current assets. We looked into that, and also we have current assets. The same to liabilities. We looked deeply into it, and we said liability, these are obligations or a business has maybe to the outside party that will result for the income outflow. Here in liability, there is an income outflow. We have to pay the outside party. That is why we call it liabilities. There are obligations incurred to the business. The same, it is categorized into two. The liabilities. We have the long-term liability or non-current liability, and we have current liability. So today, we want to finalize on capital. Our key today's we aim to tackle something on capital. Capital. This one you can also refer to its equity. Equity. Good. Capital or equity. Good. And I say that maybe I had just mentioned earlier on the same, but now that today we want to focus more on it, we can start with the definition, and we say that capital, this is just the residual amount of the amount on the owner's interest in the firm after deducting liabilities from the assets. As the formula, you can see it here. We are being told this is the residual amount, the balance that will remain in the business after we do what? The assets. We remember we say the assets, they help us to generate income, inflow to the business. So if these assets we deduct in the liabilities, those people we own, yeah, we have the creditor, the outside party, we own them. After we pay them, and how do we pay them? After deducting from the assets in the business, you know, then the balance, it will be what? Capital. Capital. Good. Capital, somebody else can refer to it. This is the money, initial amount of money, or the final amount of money or capital. You know, capital, it carries a lot, not really money, but it involves even the assets in it. Anything that is employed in the put into the business, that we call it capital. You can have maybe you have decided to take your vehicle into the business to help in the distribution of maybe of goods or something, just to help you in generating. We have the machines. All those, if you put together, those ones we call now the capital. Good. Now, capital itself is something I want us to see. As we have mentioned, we have said it's a residual amount. Now, as I've mentioned, we have final and initial capital, in which we are going to see how we will calculate for that. We'll know what we differentiate between initial capital and final capital. I can just mention before we come to that point, whereby final capital, you will realize this is normally just the initial amount, refers to maybe the end of the trading period, you know, the final. Here we are going to talk on the final capital and the initial capital. Now, the initial capital, this is when maybe the funds and the other assets, maybe we are investing in the business by the owner at the beginning of the trading period. Anything that you employ in the business, let's say you have the assets, as I've mentioned, maybe the vehicle, the machinery, plus the capital, maybe you have employed in the business. Initial stages, when you are starting your business, we call that capital. Now, let's say you have worked you have been in the business for 1 year. At the end of the year, we'll come with something called now the balance sheet or the financial statement. That is, now we'll be able to tell the final capital. We'll be able to determine the final capital, and that one is now comes at the end of the trading period. After some action you have done, withdrawings, you have done, either you have run at a profit or you have run at a loss after you have looked into all those. Good. Now, we have now known what is capital. We have said that this is just the residual now amount you have in hand after you deduct assets you deduct liabilities from assets. Now, we have this question. So for the students, this video is actually benefits, especially for those who want to aspire to be entrepreneurs, and for those who are in business, and the learners. For the learners, you have to know how to define accounting equation. That is one, and be able to know what are assets, categories of assets, liability, the same, and also the capital. Now, under capital, there is a question that will always come, which we want now to discuss, called causes of changes. Causes of changes. Causes of changes. Causes of changes in capital. In capital. Causes of changes in capital. As I've mentioned, when you are starting a business, you will have an initial capital at the start. You'll have, maybe you are starting a business with maybe, let's say, 1 million. You are starting a business, initial capital, we have 1 million. The initial capital, we have 1 million. Now, the initial capital being 1 million, there are factors that can result this 1 million either to increase, either this 1 million to increase, and also to do what? Or to decrease. Or also to do what? To decrease. So we want to look into it. Good. So these are just factors. The question can be framed that highlight or discuss factors that can result in changes in capital. Factors that can result in changes in capital. Good. Now, one, I will talk both either the ones that will increase or decrease. Now, one, we have additional investment. Now, I've invested 1 million in the business as my initial capital. One, if I do something called additional investment, additional investment, we can symbolize it as I, additional investment. So this additional investment, it occurs when the owner of the business brings in a personal, maybe cash or asset, into the business for business use. This means it will increase now this 1 million. Now let's say I bring in now the assets. As I mentioned, let's say I've now taken my vehicle into the business, decided the vehicle that I use for my personal errands, I decided to put it in the business to use it maybe to supply the goods. Now, you realize when I decide this vehicle to come into this business, the money that I could use maybe to hire vehicle to hire vehicle to come and supply these goods will remain in the business. Now I will not have those expenses, because what? I've invested the vehicle into the business, meaning there will be an increase. Because if I could have taken maybe let's say 500,000 from the business to cater for transport and all that, it means the business will do what? It will result the capital to do what? To decrease. But just in case I decide to do my additional investment by letting in the assets, that is maybe the vehicle, to cater for the transport and all that other means, it means that the capital will do what? Will increase. The capital will increase. So additional investment, we have said one, asset. Another thing, apart from assets, you can bring in cash. Now, I have the initial capital, I had 1 million. I've decided I have 200,000 in hand. Now, I say that this 200 in hand, I'm not going to use it. Let me now put in the business so that it can help in running the business. Now you realize the business we will be having the capital now in the business will increase by 200,000. So I will have 1,200,000 in the business. So that is additional investment. So the first factor that can result in increase in the initial capital, or it can result for the increase in capital, you can say additional investments. And if you want to give an explanation on the same, you can just say this it occurs, or this is when the owner of the business brings in personal cash or asset into the business for business use. Therefore, it results in an increase in capital. Good. Then we have another factor. Profit. We have profit. Profit, in this case, we can show it by P. Whereby profits, as we all know, profits is just the excess revenue. It refers to the excess revenue obtained after paying cost of the business. The cost of the business, maybe there's somebody who is owing you, you have decided to do what? To pay, there's somebody, maybe the supplier who supplied you goods. You have, you have sold the goods, and after you have sold the goods, you have decided the creditor, you had been supplied with the supply, maybe the cost certain amount of goods, so you have to pay out. So the remaining, after you have catered for all the expenses, that's what we call now the profit. So profits now, after these profits are in the business, then you decide that this profit, I'm not going to use it, but instead I'm going to retain it in the business. I'm going to retain this profit in the business. Now, after we retain this profit in the business, you realize that it's going to increase the amount of capital. So profits will result, if it will result in increase in capital only when you have not used it. It has remained, you have retained it in the business. You have retained it in the business. So profits can result in an increase in capital, if you have done what? You have not used it. Or if you are in the partnership of the business, you have not used it among the people who have invested in that business. You have decided that let now this profit you have gained in this trading period, let us do what? Let us invest it continue investing it in our business so that we can generate more profit. So profits, they can result in an increase in the business. So we have said this is just an excess revenue. Excess revenue. Good. Another factor that can result in changes of capital, we have after the vice versa of maybe, let's see something before I deal with that. We have something called losses. The opposite of profit, you can also go profit, loss. Good. So loss, we just refer to the when occurs when the cost of goods or services are greater than their sale price. You see, so this is very easy. We always say and always encourage the entrepreneurs and those who are venturing in the business that while we are doing the trading, the comprehensive income, profit and loss account in the business, we always tell the owner of the business that we are not guaranteed to get profit when you are venturing in the business. No. At the end of the trading period, you can run at a loss. When you run at a loss, it means that the capital will do what? The capital will decrease. The capital is going to decrease because you spend maybe more than this 1 million, but after you sell your goods, you realize you are having maybe 900,000. So you'll have gone at a loss of 100,000. So if there is you have calculated, you have done your income, comprehensive income, profit and loss account, and realize that the business is running at a loss, not that your business is bad. No, it's only that maybe due to one reason or another that which you have just to correct, maybe 1, 2 or 3 things, and then the business will run at a profit. But in case you get a loss, it means that this factor will result the capital invested in the business to do what? To decrease. So losses also do what? They decrease the capital. Losses decrease capital. Good. Then we have another factor called drawings. Drawings can refer to it by that, the drawings. Drawings, for this case, we always say that it refers to the money or other assets taken from the business by the owner for personal use. Good. I want to insist on this, particularly for those who are venturing in the business. There is this tendency whereby we tend to, maybe you are running a shop of maybe consumable goods, and you realize that you'll get somebody just taking something from the business and not even doing any recording. That's why we said we have those books of original entry or journals where we record anything that happens in the business, the journals, in a chronological order. When you have done a drawing from the business, you have to record it. Because if you won't record it and account for it, at the end of the trading period, we are unable to account for it. But if you are able to record it, it means we'll be able to do what? To account for it at the end of the trading period. But we are being told that drawings, if you take anything from the business, let's maybe the cash or the asset, maybe you have decided to take maybe 50,000 from the business and you have not returned it because you have done it. You have done what? You are going to use it for personal use. That means it is going to result the capital to decrease. It's going to result the capital to decrease in the business. It's going to result the capital is going to decrease in the business. And this will only come if you ignore the concepts of the accounting. This will only happen if you ignore the concept of accounting. I tend to understand all of us, we know the concepts of accounting. where we have one, there is a main one on the drawings that we have business entity concept. Business entity concept is always guide us that the account regard a business, we have to treat a business as a separate entity. We have to treat a business as a separate entity, whereby you don't have, if it's a business, treat it separate from the personal dealings. It will only come in that when you will show us that when you are done drawings, you record them. But if you don't record them, it means that you are not adhering to business entity concept. Because business entity concept says that the owner of the business has to treat business as a separate entity from personal dealings. That is under business accounting concepts. There are many accounting concepts which we are supposed to adhere to. We have the objectivity concept, we have duality concept, we have prudence concept, we have going concern concept. You know, going concern concept comes in that we are assured that the business is going to be in place first in the foreseeable future. Not that we are not going to at any given point to stop running the business. No, we are being told that the business is going to be there. So when you do drawings, meaning you are going to reduce the amount of capital in the business, and the business will not be able to stand for itself, that maybe at the end of the day you realize the business will run off. So if you do drawings today, you take outside the assets, like maybe vehicles that are assisting in transporting goods, helping in bringing the stock, but you decide to take the vehicle from the business, you go and use it for your own maybe recreational things, or you go out with it. You're not forgetting that it is supposed to help in transporting the goods. Meaning we have to get cash from the business to hire another vehicle to come, so that we can do what? We can transport goods to the market. But if that vehicle could be in, it could have assisted. Meaning the capital will decrease. The capital will decrease. Good. So those are factors that results in the either increase or decrease in the capital. So if you have been experiencing, maybe sometimes you see your capital has increased, sometimes it decreased, and you don't know. Now you have the information. As we are being told, information is power. Information is power. Good. Now, as I mentioned, we have initial capital. We have initial capital. Initial capital. And final capital. Final capital. Good. As I said, this is another question that expect you can meet it in an exam scenario, maybe for those who are the learners, and also for those running the business. You have to know the initial capital. This is the money you have invested in the business at the start of the trading period. But the final capital is the amount of you have the amount. This is the amount that you have at the end of trading period, after all these factors has taken place, after additional investment has taken place, profits you have accounted for, losses you have accounted for, drawings you have accounted for. So you'll be able to get what? The final capital. Final capital. Good. Now, what if you get a question that you calculate now? Somebody tells you to calculate the initial capital. What is the formula? In short, to get the initial capital, we always say initial capital is equals to final capital. It's equals to final capital. Now you know the final capital. You minus the additional investment. Additional investment. You minus additional investment. You minus either the net profit. Net profit. And then you add what? You add drawings. You add drawings. So this is the final capital. This is final capital, and I've said the final capital is the amount that you have at the end of the trading period after all these factors have taken place. Then additional investment, this we have talked about it. Maybe these are the assets you have added in the business, or the either cash you have added in the business. Yes. Then profit, we say this is the excess revenue that you have got in the business, excess revenue. Then drawings, we have said if you decide to take outside the assets, assets or cash for personal use, we refer to that drawings. We refer to that drawings. So this is the formula. This is the formula for doing what? For calculating initial capital. What about final capital? It just specifies, you just now play with the, now if you are mathematically now inclined, come in now. So you'll be able to understand this. That's why I said we are here to simplify either anything to do with the mathematics and to do with the accounting. So this is very easy for us. If you want to get the final capital for this case, final capital, it's just very simple. Final capital will be equals to initial capital. You add additional investment, you add profit, then you minus drawings. And meaning, if this crosses this will come this side. If it crosses the equal signs, becomes addition. Crosses this, it becomes addition. If this crosses this side, you might do what? It becomes a subtraction. Good. So this is how we do, and we can find the initial capital. We can calculate final capital. We can calculate final capital. So it will be very bad if I don't do one of the question here. One of the questions here. Good. Let us do one practical question. Let us do one practical question. The initial capital and the final capital. Good. So we have been told the following information was extracted from the books of Patrick Trader. So Patrick Trader, me now, Patrick, Mr. M.Patrick. Mr. M.Patrick, let me write Mr. M.Patrick. Mr. M.Patrick. Now this is, if you want to find me even in the YouTube for more calculation, this is the name. So this information was extracted from Mr. M.Patrick Trader. I'm an entrepreneur actually. Trader. I love trader. Good. For the year ended 31st. For the year ended 31st December 2024. At 1st December 2024. At 1st December 2024. Good. Now, that 1st December 2024. Good. Now, we are being told the closing capital as at 31st December 2024. Closing capital as at 31st December. Closing capital as 31st December 2024 was 4 million. Was 4 million Kenyan shillings, and I made a profit of 200,000. Profit was Kenyan shillings 200,000. 200,000. I, the proprietor, I invested into the business. From my personal use. I invested additional investment. I invested into the business. I invested in the business from my personal use. From my personal use amounting to 250,000. 250,000 Kenyan shilling. 250,000. Then I, the proprietor, I withdrew cash for personal use also. I withdrew cash. So drawings, I did drawings. I withdrew cash, drawings for personal use, amounting to 60,000. 60,000. Amounting to 60,000. Good. So required. We are being told. Required. You are told using initial capital formula. Using using initial capital formula. Using initial capital formula, find the initial capital. Find the initial capital. Good. So here you just have to ask yourself, what is initial capital? Initial capital, we said, this is the amount of money that is invested in the business at the start of the business, or at the start of the trading period. So we want to find the initial capital at the start of 1st January 2024, because the trading period ended, for me, it ended at 31st December 2024, meaning I started, for me, and now that I'm the one, this information has been extracted from my books of accounts, that is the year 2024. So I had to determine the amount of capital I started this business with. So I have to ask myself, what is, to calculate initial capital, we said initial capital is equals to final capital. Final capital, you less additional investment, you less also the profit I made. The profit I made, then you add the drawings. The profit I made, then you add the drawings. So it's very easy. So it will be initial capital is equals to the final capital for this case was what? The final capital, you can see here we have closing capital. And you have said final capital is the amount that we have at the end of the trading period. And the trading period just refers to the closing. We are closing. So that is now it becomes our final capital, the closing one. So closing, we had 4 million because it was at the end of the trading period. Then additional investment, I invested in the business from my personal use account. I invested in the business 250,000. Then I made a profit in that year of 200,000. Then I will add drawings. I made a drawings from the business of 60,000. 60,000 for my personal use. 60,000. Good. So after that, now, if you use your calculator, now, you can start with the any. It will do. Now, good. If you do that 4 million, you less 250, you less, you can use the body mass, because for those who are mathematically inclined, body mass, you always start with what? You'll always start with addition. So you can take 4 million, you add 60,000, then you less the 250, you less also in 200. So the initial capital, after we have done that, we have the initial capital. I had Kenyan shillings at the end of the trading period. I had in the initial capital that I started the business with. I started the business with the amount of 3,610,000. 3,610,000. So that is the initial capital, the amount that we started the business with. We started with the 3 million, and we have done the business. We managed to get the profit. We also invested from our personal use. We did the drawings. So at the end of the day, we can determine where we started from, and we can see we have 3 million. We started with 3,610,000. 610,000. Good. So that is the end of the accounting equation. What has remained now is to see how we prepare this final accounts, and we will start with the balance sheet. We are going to start with a balance sheet. We are going to look for the two formats, that is the vertical format and the horizontal format. So you can subscribe to the channel, share the video, so that in the next discussion you don't miss. Also, you can click on the notification bell so that when I upload this, you'll be able to get the regards to the remaining parts. We are now going to venture. Now we know how this accounting equation that we have said, the capital equals to asset minus liability. Now you can tell capital what it is. You can talk more about the assets. You can talk more about the liability. So we want to just to see how they are being arranged in the balance sheet and how we'll be doing the, we will be determining the financial position of the business. At the end of the day, in any business, you have to determine the financial position. You have to know the asset of the business, you have to know the liability of the business, and also you have to determine the capital of the business. So for today, I wish you all the best wherever you are watching this, and may God bless you, and may God continue being there for us as we continue learning together. Bye-bye.